Hello, everybody. So today I want to have a down-to-earth discussion about Chinese stocks. Of course, Chinese stocks are heavily debated in investing communities. Should you invest in them? Should you not? Many people, most people, as a general rule, don't touch them. And I don't have that general rule. I used to own Baba for a little bit of time, but it was dead money, and so I just sold it. I don't own any Chinese stocks right now, but it's a question that I often ask myself, like, what about the Chinese stocks? I don't have any dogma against investing in Chinese stocks. I think they have nice companies over there. But I think there's important things to discuss about the market, and it just works so much different than what we're used in the US, on Europe, or even take over emerging markets like the Indian stock market's been doing well and all of that. Like China just works entirely different, and the rules we see for the indices and the general index returns, as you'll see in a second, they don't seem to work in China. China, if I could summarize with is China is really a stock picker's market, is the way I look at it. So our Chinese stocks set for a comeback. Today, there was a stimulus, not today, three or 4 days ago, they announced a stimulus, right? Every famous YouTuber is like, oh, buy Chinese stocks now, blah, blah, blah. Anyways, I'm not a famous YouTuber. I'm just a small YouTuber, and I'm just telling you about what I think here. No investment advice. So what I think is that, yeah, there's a little bit of a stimulus. It's going to be about 1 trillion yuan, right? And what's important to note is it's smaller, much smaller than the 2020 stimulus. The 2020 stimulus was 4 trillion yuan. I went back to it. It was 4 trillion yuan versus 1 trillion yuan. And you can see these are the China Internet ETF. I'm trying to look at just the tech, Chinese tech. I don't even look at the whole market. I don't want the giant banks of China, all of that. I'm just looking at the Chinese tech. If I look at the Chinese tech, after the stimulus, the Chinese stock market went up 126% from the 2020 bottom, and it's worth noting that it peaked exactly roughly at the same level as the US stock market peaked. So the Chinese equities, they tend to move a lot with global liquidity too, not just Chinese liquidity. And there is of course some it coincides with the US, right? The US drops the rate, and then 5 days later, China announces a stimulus. So there is some international coordination, which means that if the US keeps dropping the rates, we may expect perhaps more stimulus coming from China, perhaps every time a few days after the US does it. But nonetheless, the stimulus that they announced right now is much smaller than whatever we had in 2020, and that was not necessarily true for the cut, right? We had a 50 basis point cut now in with the Fed. 2020, that was also a 50 basis point cut. So the point I'm making here is, the returns, frankly, they haven't been that outstanding in 2020 after the stimulus. And they should be lower than that right now because that stimulus is smaller. That's point number one. Point number two is I want to look at Chinese stocks, and I'm going to pick on Alibaba. Sorry about that. But, I owned this stock for like 2 years, and it did nothing. It did nothing at all for 2 years. Is anybody here, does anybody own Alibaba since 2014? When it IPO'd, when it was available as an ADR in the US. So if you've owned it since 2014, congratulations, you made 14%. So that's like, 1.1% average annual return each year, 1% a year. The stock has been a roller coaster. Oh, you've been through a lot of emotions, but look at the U.S. tech stocks over that period. The tech stocks, the Nasdaq over that period, it's between 5 and 15x, depending on which big tech stock you look at, right? Some of them higher than that. So you get a 1x. Alibaba has been a 1x, and during the stimulus, right, during the 2020 stimulus that China did, they went up 65%. So, could Alibaba go to like 150, 160? Yeah, probably, but I doubt it will go to 200. I mean, maybe I'm wrong, but if you look at history, some of the Chinese stock, especially the bigger behemoth type, Chinese tech, it hasn't performed as well historically. I want to show you, the performance. So the best ETF, the longest in existence ETF I could find about Chinese tech stock is TCEHY. It was the biggest ETF of Chinese tech stocks that I could find, the longest one, and you can see it's got the usual suspects, because Baidu, Alibaba, JD, Tencent. You can't say this ETF is not representative, absolutely representative of a Chinese market when you look at this ETF, right? It's got all of the giants. And when you have all of the giants and you study them since 2012, so 12, almost 12 and a half years, the performance is actually minus 1.5% each year versus the Nasdaq being almost 19% across the same period. You can look at this chart. I mean, it's pretty darn stark, the difference. Over a 14-year period, the Chinese tech equities have lost 17% of their value. And so, of course, as a long-term investor, this is quite scary as a long-term investor. So, like I said, I don't have any dogma against Chinese stocks, but credible commitment is, what do you actually do with your investments? I'm telling you, I don't have any Chinese shares right now. I just don't. And this is a question that a lot of people are wondering. Now, what if you were to take a risk and actually hand pick your stocks? Well, if you did that, you can see you were able to achieve returns that are in line with the Nasdaq, right? Tencent performed about 1% more than the Nasdaq over the past 14, 15 years. PinDuoDuo performed about 1% better than the Nasdaq over the past 15 years. These two have done really well, compared to other Chinese stocks. They've done roughly in line the same as the Nasdaq. Nasdaq was 18.85 and PinDuoDuo as 19.57. Now, the stocks that I select on this, not select, no investment advice, no financial advice, but the stock that I keep covering on this channel, right? Like the MicroStrategy, the Bitcoin, the Tesla, you're at multiple times the annual returns of the Nasdaq. And so, of course, getting the idiosyncratic stock risk of stock picking and only getting 1% more than the Nasdaq for taking on that idiosyncratic risk, I don't think that's enough of a return. So my point here is China is a stock picker's market. And if I were to be a stock picker, and if I were to use valuation and valuation alone to look at Chinese stocks, these are my stocks in my most undervalued spreadsheet that I usually use on this channel, where I view two important questions. The most important question to me is forward growth. How much am I paying for that forward growth? What is the cost of that forward growth? And for that, I use enterprise value over gross profit over revenue growth. What is the cost for that forward growth? And ideally, I want this to be very low, and Chinese stocks rank very well on that metric. And then I also want the rule of 40 to be at least there. A rule of 40 is something that we owe to the VC world, and it was originally the rule of X, like one of the ways to assess whether a company has the right balance between cash flow cash flow coming in, your margins, the right balance between the margin and the growth. It's all about balancing those out, and you got to have the rule of 40. So 3 stocks I see are interesting. Luckin Coffee to me, it's quite interesting because they are a leader in China. Starbucks is not doing very well right now. They're not as fancy as they used to be. They may make a comeback, but if you follow Starbucks, it's not as much of a status symbol as it used to be. Luckin Coffee, I think, is very interesting in China. I did the calculation of their stores. It's about $300,000 for each Starbucks coffee, each Luckin Coffee chain. The valuation is about $300,000 per chain. They have 20,000 coffee shops in China, and they're very popular over there, and they're also a very cheap company. Why? Because of the issues they had with their accounting a few years back. The market still has not forgotten, but yet look, they're predicted to grow sales at 39% year over year. They started going international. They have one in Singapore. Could they keep going international in other places in Asia and take over some of the Asian market? Luckin Coffee I find quite interesting, especially at a 0.077, which is about as cheap as a HIMS. Another company that I find interesting is BYD. BYD is the leader of batteries in China. They're the absolute leader of producers of batteries, and of course they also have a car brand now. And as far as the valuation goes, of course it looks much more compelling than, say, a Tesla for a company which perhaps could be seen as the closest competitor to Tesla in the electric car world, although Tesla, assuming Tesla is an electric car company, right, which is obviously not where Tesla has most of its valuation. Tesla's valuation mostly comes because of AI and self-driving, but nonetheless, it's a low cost for BYD at a 0.21. BYD, of course, we remember Charlie Munger kept saying how cheap he kept thinking BYD was. It's important to note that also Buffett and Berkshire Hathaway, they've been selling their BYD shares for quite a while now. And the last company that I find compelling in this, that has an outstanding rule of 40 at 86. This is an outstanding rule of 40 at 86. Is if PinDuoDuo, Shop France Fun is the traduction. PinDuoDuo, they own Temu in the US, right? Temu is present in Europe as well. Very popular app in the West, and they have similar apps in China, and they're predicted to grow at 57%, gross margin 62%, and their EBITDA margin is 29%. So this is a cash machine, and it's trading cheap on the forward growth basis, only a 0.09, and the rule of 40 is there. Of course, Temu, the quality of the product is not there, but that's missing the point as to what a company like Temu and PinDuoDuo is. It's not about really getting the products. It's more about the fun of making a good deal, kind of recreating the virtual mall. So I find this company interesting. The other ones I find less interesting right now. One could put a special point for Baba, Baidu, and Tencent for the AI initiatives, but then you have to be well connected to that and follow their AI initiatives, and I think there's better AI plays in the United States. So anyways, this is just my view on Chinese stock. Very much a stock picker's market in my view. The stimulus, in my view, is no guarantee of these stocks quote unquote pumping that high. At least we'll see where that goes, but it's no guarantee. But over the long run, unfortunately, the performance over the long run of Chinese tech stocks, when you look at them as an index, it's been pretty dismal. So that's unfortunate. Anyways, no financial advice, no investment advice. This was just entertainment. Please please subscribe, follow me on Patreon, follow me on Twitter. Thank you all for watching, and have a wonderful day.